Investment Council. The Finance Minister introducing the motion to begin the legislative process of hiking the capital gains tax inclusion rate. It was first, or the announcement came in April's federal budget. It has sparked debate. Our guest says these changes are about politics, not tax fairness. Let's bring in Dan Kelly, President and CEO of the CFIB, the Canadian Federation of Independent Businesses. He speaks for small companies, smaller businesses. Dan, you're no fan. Dan, take it away.
Look, this is deeply worrisome. We've got some major changes that are being introduced in such an incredibly fast manner, hoping to get a little bit more clarity or potentially see some amendments today, finally, when the government got around to introducing it. But unfortunately, it looks like they're locked in to a particular point. There doesn't seem to be any major change anyway, to the plan to introduce a significant increase in capital gains changes. And while there are a few welcome elements to the package, most small business owners said for them to support it, they wanted to see some major amendments to this package of changes. We've seen no evidence of that, other than a whole bunch of really negative rhetoric that kind of poison the atmosphere for small businesses.
But there's a huge variety of small businesses. I mean, say somebody has a store, a convenience store, and they're not going to make as much profit when they sell it. Is that really going to affect our national economic growth? I could see in the case of a tech startup, but the government has got carve-outs here for certain types of entrepreneurs.
There are. And look, for the sale of a business, if your business is quite small and in certain sectors of the economy, the convenience store example, you might actually be better off with these changes than you were before. But the problem is that this is a very broad set of tax policies. It affects, if your business is trying to get from small to medium-sized, the incentives have changed, and the prospect of having higher capital gains taxes when you sell your business, of course, is not going to be helpful in incenting people to go through the hell that they have to go through to try to grow their company to the next level. Secondly, for businesses that maintain some capital gains, some, for example, an investment portfolio or a second property within their corporation, they are just complete net losers from this. And this, of course, is part of the complaint of medical doctors who often have an investment portfolio within their corporation on which they plan to rely for retirement. And we've got a huge swath of small business owners that do that. And that is not calculated into the 0.17% that the minister is talking about. That money, the budget even admits, there's about 300,000 businesses that would be directly affected by these changes. So this has some pretty serious implications. And if it affects the motivations to go into business or the motivations to grow your business, well, that affects all of us because we depend on those firms for tax revenue, for job creation.
So this Canadian Entrepreneurs Incentive, and Dan, you did say, I know, and that's interesting that you can see the point that some entrepreneurs could be better off. The government says that with the lifetime maximum of $2 million in eligible capital gains and with a new 1.25 million lifetime capital gains exemption, entrepreneurs will pay less tax and be better off on capital gains of up to $6.25 million. So above $6.25 million, I mean, you're pretty wealthy, and the government says we're going after the wealthy here.
Yeah, but look, that $6.25 million comes after a whole bunch of tests that you have to jump through in order to receive it. First of all, you have to sell the shares of your business, so you have to sell it as a going concern, not selling the assets or the property that the business is in to qualify. Secondly, so you have to be incorporated. You have to be a CCPC, you have to sell the shares of your business, you have to be a founder of that business, you have to have owned it for 5 years, and you have to be in about half a dozen sectors of the economy, with the other half of Canada's business community excluded from access if you happen to run a restaurant, a hotel, a professional corporation. So yeah, there are some businesses that will come out ahead, but there are, unfortunately, a whole bunch of losers, especially those that have some investments within their corporations that they use to either pay for their retirement or to save for a business investment in, say, a second corporation that they might aspire to own. These are the groups that, of course, have pretty big impacts, outsized impacts on the economy. This is not just the rich. I had a email yesterday from a long email yesterday from a candy shop owner in Winnipeg, and because of the structure in which she owns her building, she's going to pay higher capital gains on a fairly modest income.
Right. I suppose, though, just wage slaves who just earn an income will say, well, we don't have all these deductions. I know we have a modest exclusion before they start taxing us, but it does seem like entrepreneurs have all these devices for avoiding taxes completely legitimately under the law, whereas normal wage payers don't.
Well, look, I think to do an apples-to-apples comparison, we also have to look at the sum total of the taxes that business owners pay relative to consumers. There are a whole bunch of taxes that consumers have never even heard of that the employer has to pay, like workers' compensation premiums. They have to pay 60% of the employment insurance costs in the country. It is not by any means easy or tax-free to run a business in Canada. You have a pretty high bar to begin with. Our point, though, is that the messaging that Ottawa is using on this is sending a signal to small and medium-sized businesses that their concerns are really low down the order. Even if one accepts that this is a good package, I certainly don't. But if you did accept that, to announce the details of the package 2 weeks before they go into effect really provides nobody any time to make any informed changes to try to modify the impact of the capital gains hike on their business. It really is quite negative. When you add to that the class warfare language that is being used right now, it does seem like this has a lot more to do with setting a trap for the Tories than it does fixing some gap in tax policy in